Good Sunday morning, everyone. Welcome to the first video of 2022. Every year I try to figure out the over under and how many times I'm going to write the date of 2021, which used to be on checks, but most of us don't write checks anymore. I think I write, I don't know, maybe a handful all year long. So again, welcome to 2022. Let me start off by wishing you the most sincere, happy, healthy, safe, peaceful, and prosperous 2022. A year ago, we thought we all survived 2020, which was the most difficult year of many of our lives. And I thought 2021 was a little easier as, the economy got going, and the vaccines are probably the greatest single stimulus in our history. And things felt better until the middle of the year. And then the Delta variant came and Omicron came. In any case, 2022, let's hope there are few and far between of new variants coming, and they're very mild and light, and we can kind of get back to somewhat sense of normalcy. I'm sure, like many of you, you're exhausted. I'm exhausted of wearing, masks around it. And I don't even do it that often because I'm in the office, but I'm just I'm tired of it. I'm tired of having to think so much when we just go out and do something really quickly. In any case, okay, 2022, I will say this. I am super excited for 2022. 2021 was certainly, I wrote this the other day in the blog. I don't think it was all that eventful. Take away the virus, which obviously is a big takeaway, but there weren't a lot of events that happened in 2021. So I would think 2022 is going to be a bit more eventful. I'm going to write extensively about this in my end of year report to clients, which I will share most of it with you in the middle and of January. So I've got a lot on my calendar for 2022 for everyone, and I spent a lot of time planning already. I'm not done, but you can certainly look forward to, as we continue our client event series, we'll have bourbon, vodka, and agave tasting sometime over the winter, sooner than later. I need to just get through. The next couple of weeks are always the busiest time of the year for me. We reconcile December, we reconcile Q4, we reconcile 2021. I write my Q4 report. We have a webinar coming up for a webinar this Thursday night I talk about what happened during Q4, my forecast for Q1, talk about all of our strategies, our performance, etc. So we just need to get through this 2-week period. And then I will get back to what I had hoped to do during the month of January. Let's see what else. What other client events we're going to do? I think we're going to do a lot. Well, I said this last year, didn't work out so well. I'm hoping to get back and doing a live in-person event in April or May with food and some wine tasting from Kerr Cellars. So that's, fingers are crossed. We're going to plan it, and then hopefully the gods that are watching down, the market gods and God will oblige us and let us do something safely and without having to worry about people getting sick. All right, so that's a prelude of things to come. And let me see what else I want to mention. All right, let's go to the market. So I'll give you it's a brief one on the market, brief for me anyway. One is, we left off video-wise, I think, in late November, where an awful lot of people are calling for the end of the bull market. I got some video, I don't know how it got into my inbox, from somebody else, from Peter Eliades, who's been doing this for 30, 40, no more, probably 50 years. He's always negative. He's kind of a bear, and he talked about, I think it was like November 20th, 21st, that being the end of the bull market. That was the peak. We're done. There's no other scenarios, blah, 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 blah. All right, I wasn't so, he always talks negatively, so I wasn't really giving it that much credence. And then couple of folks who I know and who are not prone to hyperbole talked about that also, that November peak being the end all be all, bull market's over. So I'm going to share my screen. So that I found interesting that we had a call, a plethora, a cornucopia, a lot of people calling, right here as the end of the bull market. Bull market was done. Adios, sayonara. As you know, I wrote about it extensively. I said, no, not happening. I think that when they started calling this the end of the bull market, the market was down in here. And so it looked to me as though that was going to create an awful lot of fuel for a run to new highs. Very anti-consensus. Almost no one thought we'd get to new highs this quickly. I felt pretty strongly because everyone, a lot of people are coming together with the same call, which is rarely rewarded. So at the end of November, I felt pretty good that by early 2022, we're hitting new highs. And I was questioning whether it was going to be the rising tide lifting all boats or it was going to be kind of selective. And what we got was, well, I'm going to wait. Hold on that one. So we got a run. It did not immediately go to new highs, meaning the next couple of weeks, but we had this little December swoon for 3 days right in here that bottomed on the 20th. And what I'd written about was that should not have happened. The market wasn't doing what it was supposed to do. And it doesn't have to, frankly, just because I say something and historically the odds, I always talk about historically in the odds favor. There's never an absolute guarantee. It doesn't happen in the markets. So this 3-day decline was out of character. And I said on this Monday, which was December 20th, I did pound the table. You can read it on the blog. We went very, very heavily into equities, and the average equity portfolio was well over 100% of equities on this day because this looked like it was an anomaly and this was going to be the low and we're going to go to new highs. I did not think this rally would be this strong this quickly. I thought we'd have a more underwhelming rally, but rally I did think we'd have, and the market forces did cooperate and we got to new highs. That's a good thing. The last 4 days of the year, things are fine. I mean, we really didn't go anywhere. It was not a lot going on. So one thing I'd also written about was the Santa Claus Rally, which is the last 5 days of the year and the first 2 of the new year. So the Santa Claus Rally is supposed to begin right where the arrow is, right here. It really was a 1-day rally, folks. I mean, so far we had 1 rally day and then 4 pause digestion days. And then we'll have the 2 days to finish off. I'm going to write about this on the blog, but just because if Santa cooperates and we're up the next 2 days, don't get carried away. Don't listen to what's being said in the financial media because it's typically wrong. They put way too much credence on this 7 trading day period for forecasting next year and the next quarter. It's bunk, which I will show you when I write about it in the next couple of days. So buyer beware, caveat emptor. Now let's see. So we're here. The market didn't close well on the last, we had a pretty good sell-off the last 5-10 minutes of Friday. That normally is something that does happen. I had some trades to do and I kept saying, all right, I'm waiting for this quick bottom to fall. Quick. That's what normally happens on New Year's Eve when the market's open. And it came a little later than I thought. It literally, by a matter of like 20 minutes, whatever. So here we are heading into the new year. Let me say this, to begin the new year, stocks are supposed to rally on, look at my new calendar, Monday the 3rd. It is seasonally, it's a seasonally positive day that stocks rally on the first day of the new year. We'll see if it happens. I think it's like an 80% probability, something like that, maybe a little bit more. And it depends on what date you start from, because way back, things were much easier to predict than they are today with computer programs and algorithms, etc. So 2021, really, there were so many times during the year that the level of doubt rose and the naysayers came out of the woodwork and the bears were all pounding the end of the bull market. We heard it dozens of times. And what happened? Every single juncture, the doubters, the naysayers, the bears, the Armageddon crowd, they've been punished really without mercy over and over and over again. So when we look at the year, each little decline of 5% or less, people came out of the woodwork calling for the end of the world. And by and large, what happened? You buy the dip and we went to new highs. And that was really my theme all year. I didn't overthink it. So I certainly made my share of mistakes because I make mistakes every year. So why should 2021 be any different? But for sure, each and every little rally, and we only had, each and every little decline, and we only had 5% declines, was caused to buy the dip, and we went to new highs. So the naysayers, I don't know how they have any money left, frankly, unless they were just writing newsletters. And folks, you guys know this. It's so much easier to write a newsletter because you don't lose any money than actually have to manage money in a portfolio. So for someone who just keeps betting against the market and getting blown up writing a newsletter, so what? You're doing it in a portfolio, and there are obviously significant consequences when you keep betting against the stock market to go up. It goes up and you blow up when you're running real money. So as you know, there's a huge difference. Let's see what else I want to say before. So we talked about Santa Claus. I'll firm that up, my comments, in a couple of days. Oh, I have this little trend, this little study based on the first 5 days of the new year. And I look at the Dow, the S&P, the NASDAQ, the mid caps, and the small caps, 5 different market indices for the first 5 days of the new year. This year, the study says the S&P 500 is supposed to lead the first 5 days of the year. It doesn't mean the market has to go up. We could go down, 2, 3, 5, 6%, but the S&P is supposed to lead the first 5 days. We'll see if that holds true. It's a trend I do play every year because it has a high degree of accuracy. So we sold all of our small cap growth on Friday, and we bought RSP, which is the equal weight S&P 500, in its place. And if the market cooperates and things go well on Monday, which is tomorrow, I will likely sell some more small caps and replace them. We'll see what happens. We'll see how the day goes, see what leads, see what lags. So let's see, is there anything else I want to talk about for the year? Listen, I've got my Fearless Forecast 2022 is basically done. I'm going to change it up this year. So I will be sending it out in a short bulleted email over the next 2 or 3 days. And then I'll do a wrap up, a report card of how my 2021 forecast did. That takes me a little longer. And then I'll probably come back and do a video to sum it all up. So whether you like it in email form or you like it in video form, we'll do both. But 2022, I don't think is going to be as sanguine. I don't think it's going to be as easy as 2021. I don't think the rising tide's lifting all boats. I think we are in for a much more difficult year. Doesn't mean we have to go down 10, 15, 20%. I don't think that's the case either. But I don't think it will look like this chart that I'm showing you right now, where each and every 5% or less decline was bought. I don't think you'll immediately be rewarded. I think it's going to be a tougher slog. And we'll cross those bridges as we get there. But for sure, I think we're going to put in a peak, at least a trading peak in the market. I'm going to give myself some more rope to hang me. But in the first 6 weeks of the year, but I actually think it will be a lot quicker than mid-February where we could see a peak. But again, let's cross that bridge when we get there. If you like the video, if you like what you see, please give me a thumbs up on YouTube. And I will be back with an awful lot of content, both in video form, but certainly on the blog And my hope this year is to get back to writing some longer newsletters with some more financial planning type stuff in there. That we just did a client survey, and that was the #1 most requested topic, was some more generic financial planning topics. So I do want to oblige, and I'm going to attempt to get back to writing longer newsletters, and maybe we'll shorten up the blog, or maybe we'll try to write a newsletter every other week and replace one of the blog postings. So as always, if you have constructively critical comments, I certainly welcome them. You can call the office, you can email me. That'd be great. I always love to hear from people who watch the videos and people who read the blog. Tell me what you like, tell me what you don't like. Frankly, the only way it works is if I know what's working, what's not. So please don't be shy, please share. And with that, it is almost time for Sunday kickoff of NFL. My Cowboys, I'm not taking my clothes off. My Cowboys are ready to face the Cardinals today. It's going to be a tough game, but we know we're going to the playoffs. Hopefully, my UConn Huskies, men and women's basketball, will get back into action. They're postponed this weekend and last week for COVID. And I imagine we're not the only ones, but we got to get through the next couple of weeks. One of my researchers who just looks at math, doesn't really get involved in the who's and the whys, but just plotted COVID cases. And he felt pretty confident that we were going to see COVID peak in the middle of January, the Omicron variant peak in the middle of January and go down. You can go look at the South Africa stats. I think they're down cases 35% week over week, some big number like that, and that we should supposed to follow suit shortly. So with that, I say thanks again for watching. Thanks for reading my blogs in 2021. I greatly appreciate it. I never take my readers or my viewers for granted. So please know that. And I am certainly always around. Well, not always around, but I welcome your questions, comments, and concerns. And with that, I will say thank you. Here's to a really good 2022, certainly better than 2021. And I shall be back shortly. Take care. Bye-bye.